ServiceNow stock down 50% since all-time highs back in 2025. The drawdown is because of AI anxiety. Investors believe that AI will replace ServiceNow's core products, ticketing systems, customer service management, and workflow automation. Investors are also scared of the market shift. SaaS companies used to trade at a premium because they have steady subscription revenue, predictable revenue, where each human user was a source of revenue. But AI may destroy that predictable revenue source. But what if one day AI can do the work of 10 people? That 10-person revenue source becomes one AI. This contraction in headcount can shrink revenue for SaaS companies like ServiceNow. So where does Now go from here? Is Now stock getting disrupted by AI? Let's look at the financials together. As of recording, I have stock in other software companies like ServiceNow. These companies are trading at a much deeper discount compared to Now stock that I believe will grow even more. Check out udomo.com and see my positions in the Udomo fund. Creating an account is free. You can easily visualize ServiceNow's financials at udomo.com. First, we see Now's historic stock price. This sharp decline in Now's 5-for-1 stock split happened on December 18th. Now achieved $28 billion in remaining performance obligations, or RPOs. These represent the total value of all future revenue that the company has already secured through signed non-cancelable contracts, but are not yet earned or recognized on its income statement. While recognized and revenue earned in 2025 was $13 million. RPO is up 26% and recognized revenue is up 21% year over year. So we have a software company growing in the double digits. This does not look like a company being disrupted by AI. Gross profit is also growing in the double digits, up 18% in 2025. Net income grew by 30%. Now's top line fundamentals are growing strong. You can also see Now's balance sheet on udomo.com. We can select cash and current liabilities and easily see that Now has plenty of cash to pay its immediate debts, raising no alarm about their ability to pay down current debt. We also have the free cash flow chart, which is growing exponentially. Now generated $5.4 billion in operating income compared to just $868 million in CapEx. Now is a lean CapEx company, enabling Now to generate a lot of free cash flow at $4.5 billion. Now is currently trading at a discount from a price to sales and price to free cash flow perspective compared to its historic self. And udomo.com makes it super easy to see this valuation throughout history. Now's price to sales is at 5.6 compared to the historic average of 9.3. So from a revenue perspective, Now is trading at a 50% discount. Investors are now only willing to pay $5 for every $1 in revenue Now generates, compared to $9 historically. Same with free cash flow. Now historically trades for a price to free cash flow of 72, compared to today at 35. This is perhaps the best feature on udomo.com. You can now compare financial growth of the stock you're looking at compared to the industry average. In this case, let's look at the software sector. Now's revenue has grown 26% year over year compared to the industry average at only 11%. So Now grew revenue faster compared to competitors, which is a good sign. Now is keeping and taking market share. We can even see net income growth. Now grew 30% compared to competitors, average contracting at -1%. We can also compare Now's valuation ratios compared to the industry average. Now trades at a premium compared to other SaaS companies. Now's price to sales are at 5.6 compared to the industry average of 3.6. Now's price to free cash flow is 35 compared to the industry average of 23. So where does Now go from here? ServiceNow has demonstrated exceptional revenue and contract momentum. If I show you Now's top line fundamentals and asked you which year ChatGPT first came out, would you be able to point it out? Now does not look like a stock being disrupted by AI. ChatGPT came out in 2022, by the way, and Now has since then exponentially increased. Now is also embracing AI into their existing workflows and tools. Now Assist is ServiceNow's generative AI suite designed to integrate artificial intelligence directly into ServiceNow's platform to enhance productivity through automation and specialized workflows. The platform is evolving from basic automation into an AI control tower, enabling enterprises to operate securely in an agentic AI world where AI can take more autonomous actions. And there is demand for Now's AI. Now Assist net new annual contract value, or ACVs, in Q4 2025 more than doubled year over year. ServiceNow is an expert in ticketing systems and automating workflows. Yes, it is possible for companies to vibe code their own ServiceNow chip system, but will they actually do this? What do banks want to focus on? Producing loans. What do restaurants want to focus on? Servicing more tables. Banks and restaurants do not want to waste their time dealing with developing their own chip ticketing system. Yes, companies can vibe code their own system. The vibe coder still has to develop their own database to house the chip tickets, develop the relationships between these tables, set up a login page, an account creation page, ensure the environment stays secure, ensure that data is legible to humans. Especially for banks, banks need a chip ticket system that is in a secure environment, using customer information, SSN, account numbers, something that ServiceNow can provide today. As of now, I do not see major threats to ServiceNow's current platform. AI may even improve Now's products instead of destroying it, making Now a discount stock to buy today. This is my own personal opinion and not financial advice, but check out udomo.com to see all my stock positions in the Udomo fund. I have similar stocks like Now, like ServiceNow, in my portfolio that I believe are at a bigger discount compared to ServiceNow. So check that out. Check out udomo.com. Thank you for watching, and I will see you all in the next one.